Counterrange Theory Trader back with you with another video going over the weekend review for this past week. So we're just going to dive right into it. A little bit of a different format here because I just did a simple spreadsheet of the weekend review with the pairs, and I just hyperlinked all of the trades that took place. Some of them I took, most of them I did not. But let's just go through it. And we're going to go Monday through Friday. So we're going to start with the 8th of September. And as you can see, we only had a few trades this week. So this isn't completely all of them, but we're going to go through the ones that stuck out the most. So I'm not going to go through all of these because it really is the same thing over and over. So the first thing we're going to look at for Monday, a good trade that took place was a 5-9 long. Now, when I say 5-9, what that means is 5 a.m. Eastern Standard Time to 9 a.m. Eastern Standard Time. And the chart pattern reference that we use is the two candle range theory. This is a short version of it where it goes, the range is created at 5 a.m. and then starting at 9 a.m., you look for price to take one side of that range and then reverse. In this case, though, it's a long example, so I'll show you that now. Right here. Okay, so this is the whole day. This is the 1700 or 5 p.m. candle session. Okay, candle right here. This is a 4-hour chart. Price went down. This right here is the 5 a.m. 4-hour candle. Price dipped slightly below it in the 9 o'clock hour and then rocketed up. So you see here two candle pattern, candle one, candle two. So that's that. And of course, obviously you take your profit because as you can see, had you held, price came right back down. So we use the opposite side of the range as our take profit for the most part, either the middle of the range or the top of the range. And then that's where you want to get out. So let's take a look at our short-term chart here. The best entry was at 920. This is a 5-minute chart. So you see here, price barely tapped the low and then closed right back inside. So boom, and it went up and that was it. I think this was a 1-to-5 risk to reward ratio. But again, this was your trade right here in the 920 USA session for a dollar CAD on Monday. So that's that. Something else as well I like to see that I really just started taking note of is that if the high or low of the day is created at 5 p.m. or 1700 hours on the 4-hour chart of the market reset, if this is the high and the low comes at either 5 or 9, the odds of success may increase. Not a guarantee, obviously, but I like looking for that where the high of the day starts right at the candle open and then the low of the day comes for the London or USA session, looking for the low of the day here. So the high here, the low here. But you'll see more examples of that as I go on. So we'll do a 159 on Aussie Swiss and then do keep going. So this is your basic 3-candle pattern, 1, 2, 3. Our reference pattern is going to be the 3-candle pattern, 1, 2, 3. So there you go. Obviously, this has the days of the week, but just ignore that. Just focus on the candle patterns. This is a 4-hour chart that I'm looking at here. So once again, if you notice, though, the 5 o'clock candle made the low of the day, so we like to see that. And then the high of the day came right here in the 5 o'clock hour, so you got a 5 to 5. So that's 159. And so let's take a look at our entry. The entry would have been at 845, right about in here. And this gave a 1 to about 1.8. It did break out of the range just a little bit and then started to retrace. So it's not guaranteed, pardon me, that price will break out of the range. But at the same time, once it breaks out, and you see it start to consolidate, it's a good signal to just go ahead and get on out. So, but that's the 5-minute chart on this one. So that's how that worked out. So again, you have that's the big picture and the actual entry on the 5-minute chart. So that was Monday, couple trades there. Let's see, for Tuesday, let's try to do like one long and one short. So we'll do a 159 long here on dollar yen. So once again, we like to see the high of the day. Again, it's not required, but I like seeing high of day made for the 5 o'clock hour. And then this time the low of day was made at the 9 o'clock hour. I believe this is 5. Let me see what it says. Yeah, okay, 159. So 5 o'clock made the low of the day right here and then came up. So your entry, you had a couple chances to get in here. Remember, your entry range is going to be the low of the range candle. So right in there. Right in there. So you see price opened, it came all the way down and then gave you another chance to get in and then rocketed up. So let's go down to the lower time frame. The best entry was at 7:30. This is that wick there. We see price came all the way down. I think there was news during this time frame, so you probably wouldn't have got that. So your best entry would have been back here at 730. This paid 1 to 5. It actually paid out more than that as price went ahead and broke out of the range. But yeah, that was an excellent trade there. So again, same thing over and over, big picture, and then the little picture I just showed you. And let's see if we can find a short example for Tuesday, and then we'll go on. So here's a 159 short on New Zealand dollar. So let's see here. So this is the 5 o'clock range, and then the 9 o'clock range. I think again this was a news day for the dollar. So while this entry would have been better during the 5 o'clock hour or 5 o'clock candle than this one. But let's take a look and see at the lower time frame and see when a good entry may have been. Looks like it was about 940 right in here. While price did spike when the news happened, it didn't take out the high of the day. That's always a good sign. But depending on who your broker is, sometimes the spread may take you out because you can get like a 30 pip spread and it can just stop out anybody, or you get a margin call. So you have to watch your position sizes when news happens. So, or just avoid news. You don't have to trade news. So sometimes things happens on news, sometimes it doesn't, or it'll just spike in both directions and just keep going, keep doing what it's going to do anyway. I don't try to predict the news. I just try to stick with my candle range theory bias. Sometimes it works out, but other times it does not. So that was that. So again, you have big picture and little picture. Okay, so that's that for New Zealand dollar. Let's mosey on over to Wednesday. We'll see if we can. Wednesday did not have a lot. I think Wednesday only had one that I found. There may have been others, but this was just the main one that stuck out. So it was a 5-9 pattern for our reference once again. Two candle pattern. Okay, long or short. Let me see if this was yeah. So this was a short. So again, we noticed the low of the day is at 5. So seeing that, obviously, if we're looking for a 5-9, we'd like to see the 5 o'clock 4 a.m. candle create the high of the day, which it does, and then drop. So let's take a look at our best entry. It would have been at 10:10 a.m. right here. Anywhere here, just a basic double top or M pattern, however you want to call it, around the range top. Went down, gave 1 to 4 risk to reward before it started to retrace. So we love to see it. And that was that. So again, we have big picture. Okay, low of the day here at 5, goes up, creates the high of the day, and then drops down. We're out before this retrace comes, though. Okay, you don't hold these trades overnight, and you're out. So that's that. And let's see, let's go on over to Thursday. This was Euro Yen. You have a 5-9, 2 candle pattern. This one, the low of the day was not at 5. It was created by the 1 a.m. 4-hour candle. But, like I said, you don't even have to see this. I just do like to see where price has come from. Because ideally, you want to see price go up and then just retrace or come down, do something like that. But at the end of the day, this is not the range candle. This big green candle, you may have started that, and you had 2 chances actually. You could have taken this, or in the USA session, you created another high, and then you could have taken that down. Obviously, if you were going to go long, the best entry would have been all the way over here. But because we're dealing with the candle range theory during our specific time frames, this was the better setup right here for going short. So let's go down to our entry time frame. It was at 9:45. So again, a basic M pattern around the range high, and it paid out 1 to 4. So very simple, So you got big picture, okay, this high, and then the next high created here. And little picture right here. Okay, first high is probably back here, and then a new high right here. Came back a little bit and then dropped. So that's it. Same thing over and over. Let's see if I can find a long example for Thursday. I don't see any. Okay, so let's go over to Friday, because that was pretty much it. Now, Friday, there's something called the Friday pullback trade that I love to see, that I'm going to talk about this. I haven't talked about this in the channel, and I'm going to create a separate video on it. But this is a trade, even before I started trading candle range theory, I would love to see this. So here's the Friday pullback trade. This is a long example, though. Okay, so Friday pullback trade works like this. This is the daily chart. This is not a 4-hour chart. So this is Monday, Tuesday, Wednesday, Thursday, and then Friday. All you look for price to do is you got 4 days of drop. You'd like to see Friday sweep below Thursday low to trap anybody who's looking for a continuation, and then just reverse. It doesn't necessarily reverse all the way back up to Thursday, but at the same time, it can give a nice pullback trade. I would not say this is a trend reversal. It's just something to look for. So you just get in where you can, and obviously these trades you want to hold through the USA session because price has been dropping so much that you're just anticipating a pretty much the majority of the day to retrace. So this is Euro New Zealand. This is what it did. And as far as the candle range theory, you're framing it off the daily low, not the 4 hour. So this is the low of the day, the prior low of the day from Thursday. This is Friday. So the best entry was been at 12 a.m. These trades you want to try to look for, they can happen really at any time earlier in the day. The earlier, the better. So, and obviously it paid out to a 1 to 5 or even up to a 1 to 7. So you could have made 5 to 7 times your money, your risk on this one, because obviously you see here the all day rise on Euro New Zealand. Okay, so there's the big picture daily chart, then the entry right here on Friday. Okay, these trades they don't happen every week, to be honest. But when you see this steady drop, look for Friday to possibly give a pullback. Let's see here. The Aussies and New Zealand's pretty much did the same thing. So because Aussie, I'll just show you this real quick. I'll show you the rest of them. Another Friday pullback trade. Monday, Tuesday, Wednesday, Thursday. Friday dipped below Friday's low, came back up. Okay, same thing on Euro Aussie, and then on Pound Aussie. Monday, Tuesday, Wednesday, Thursday, Friday dipped below, closed inside. Okay, so there you go. Same thing there. And then last but not least, let's look at Euro, Pound CAD. All right, so let's take a look at the big picture 4 hour chart. Okay, so the prior high of day was created in the 5 a.m. hour. Price went down, 1, 2, and then 5 a.m. created the low of the day and then rocketed up to create a new high of the day. But this was I call it a 5-5 reversal. The high of the day being created at 5, and then the low of the day, 5 p.m., and then the low of the day being created at 5 a.m. So I like to see that, and then price just skyrocketed up. So let's take a look at our entry. Okay, the best entry would have been about 5:55 a.m. A lot of fives there. Okay, and then just went up and it paid out 1 to 5. Okay, so that was that and created a new high of the day. So those were most of the trades for the day. There were others, but these are the ones that stood out the most to me. So again, same pattern over and over. You're looking for 2 candles or 3 candles. At least those are my preferred candle range theories to trade. You trade yours, but for now, appreciate you watching, appreciate your time and attention. Take those screenshots and build your library, refer to them throughout the week so that you know what you're looking for, both big picture and little picture. You can just create a little small spreadsheet like this or do it on Google Sheets, whatever you prefer. But that was the brief weekend review. There were more, but those are the main ones that stuck out to me. So we'll keep it going for next week. Most High willing. You guys have a great rest of your day. Take care.